Hello and welcome. You are listening to the Investor Lab, the auditory epicenter for passionate people seeking a life of freedom, choice, and abundance. And on today's show, I talk with Terry Ryder about his property market predictions. So Terry recently produced a report called the Price Predictor Index, which is basically a report where he looks at the data and says which areas around the country he thinks are going to grow based on some specific data that he looks at. But more than that, we spoke about what trends came out of the research, which was really interesting. We talk about how Sydney has become decoupled from the rest of the Australian market. We talked about the rising trend towards apartments and what areas are most affected by that. And we also talked about regionals and even talked about some very specific suburbs and areas that you might be interested in as well. So if you've got any interest in knowing where the market is going and what's really happening out there, then this episode is for you. So without any further ado, let's get stuck right into it, and I'll see you on the inside. Hey guys, welcome back to the Investor Lab. Joining me on today's show is a great friend of the podcast, Terry Ryder. How are you?
I'm good. Always excited to be talking about real estate markets, particularly in times like these, because now more than ever before, there's a disconnect between what's happening with real estate markets and what the media is telling us is happening with real estate markets. So it's really important for people like you and me to try and provide some balance in the analysis so that people are interested in property investment and get some real information about what's really happening.
Yeah, it's fascinating, isn't it? Because, you know, there is so much doom and gloom right now. And it's really interesting, right? And you and I have seen this over the last you for much longer than me, right? But for me, particularly over the last couple of years, when the media and all of the not just the media, but the friends and the family and all of the noise out there is saying the world's going to end. And then to stand out and say, no, everything's good. You know, some people start to think that you're mad or that you're, full of crap, basically, right?
Well, you've got a vested interest in talking up the market, perhaps.
Well, this is true, right? And this is a challenge for me, particularly. Sorry to cut you off there, right? Because we do help people to buy properties. So I'm sitting there going, how do I, this is fact, not hype. I'm not trying to pump up the market. It's just like, look at the information. How do you help people navigate that?
Well, look, one of my central themes at the moment is this. When a major report on price data is published, like CoreLogic at the start of every month, don't read what the media says in the report. Get the actual report and look what the numbers say. The report is free. It's easily accessible. You can download it from their website. Yeah. Look at what the numbers actually say and ignore what media says in the report, because there's a huge contrast between those two things. And so I think if people start doing that, they can have a better idea of what's really going on rather than, the last CoreLogic price report published on the 1st of June has precipitated headlines across the country saying prices falling across Australia. Yeah. But the actual report shows that prices have risen in 12 of the 15 market jurisdictions, the 8 capital cities, the 7 state regional markets. Out of the 15, prices rose in May in 12 of them, according to the CoreLogic figures. And figures from other sources like SQM Research, for example, have even more bullish numbers. So if you actually get the report and look at what it actually says rather than read the media crap, then you're going to have a better idea what's going on. But I just want to hit you with one other thought. And this, I think, a significant Finder, the comparison website, has done. They've got a consumer sentiment tracker survey they do regularly. And the most recent one they did on what people expect to happen with property prices. And the result was that even in cities like Sydney and Melbourne, the vast majority of people think prices are going to rise or stay the same. Only 20% in Melbourne and Sydney think prices will fall. And they're even more bullish in Brisbane, Perth, and Adelaide. And what that tells me is people are just so fed up with media forecasting property prices to crash because it's been going on for years. I remember when COVID struck a couple of years ago, prices were going to drop anything up to 30%. And what we got was a property boom. And people are just saying, we've heard it all before. We're just going to get on with it.
Yeah, it's really interesting because I actually, as you were just saying that of the 15 regions, 12 are rising, those specific numbers, I actually remember you and I, and we could go back, I think, there was a podcast that we did together. I'm going to guess that it was about May last year, because I remember specifically the same thing happening. The media was saying, property market is going down or whatever, but it was like, it was 12 of 15 regions were going up at the time. And it's like, it's like it repeats itself. And it's a really interesting point on the consumer sentiment element as well, because, fundamentally, look, it's a lot of complex inputs that go into property markets, but fundamentally the way people feel about it is the thing that drives the value, right? So if consumer sentiment is saying, the psychographics are saying, yeah, it's going to stay this, that'll actually dictate where the market goes.
Yeah. There's two interesting things about that survey. One is that Finder themselves didn't place great emphasis on it, because they're like, so many people are pumping out information about property, trying to get free publicity. They know that if they put out sensational negatives, they enhance their chances of publicity. So Finder didn't make much play of this very positive survey. And the second thing is that not a single media outlet in Australia reported the results of that survey,
which is pretty interesting. But I think you've touched on another. I think it really touches on another great point, which you kind of touched on there. I think people have got doom fatigue, right? I think there's just been so much, because what has happened with the proliferation of media, particularly as media has gone from print to online, and then they tried to work out how to monetize online, and then they've started to kind of get some traction, all of that kind of stuff. They've really, as we've talked about this before, they've gone more and more towards that kind of clickbait type, get the attention, get the clicks, get the eyeballs, and all of that kind of stuff. So they turn everything into a massive issue. And I think everyone's just got doom fatigue, because every 2 weeks, you can almost time your watch to it, right? Every 2 weeks, there will be another major crisis. And I've been watching this because I think that people's internal alarm systems only got about 2 weeks lifespan in it, because, war in Ukraine, 2 weeks later, okay, cool. People are like, okay, well, it's not that bad. Inflation, 2 weeks later, okay, well, that's all right. Election, 2 weeks later, everyone starts to come down. I think everyone's only got about a 2 week life cycle in any of this kind of stuff, because they're all just getting burnt out with the constant doom cycle.
Well, I think you've actually come up with a new buzz term that I think is actually going to get some traction: doom fatigue. I actually think you're right. I'm having a lot of discussions about this with members of my team, and also with my partner when we're sitting around the fire on these cold winter evenings. There's been so much, hasn't there, in the last 2 years with COVID and war in Europe, and now we've got shortages and rising prices. And people are just absolutely battered and bruised by it. And media's just piling on with housing market stuff. And I think people are absolutely fed up. I'm actually, I've always known people have always like, yeah, you know what the media's like. But it's different now. People are actually angry about it. People are really getting angry about the way the media is just bashing us with negativity, and they're utterly fed up with it.
Absolutely. And I think there's another layer to it as well, right? Because not discounting the fact that, yes, cost of living is going up at the moment because of inflation. And yes, during COVID, we had lockdowns. And yes, during COVID, people died. And, not discounting the fact that there are realities that we all face. By and large, despite all of the doom that we get told, everyone's all right. By and large, everyone's okay. And we're still cracking on. And I think everyone starts to go like, what even is the problem?
Well, look at the unemployment rate. I mean, it's extraordinarily low, and the property market has boomed. And, Australia has actually ridden this wave extremely well. And most people, I think, are doing okay. We don't discount those that are struggling, but overall, considering the times we've been through, this country has weathered the storm really well, and most people are in work, and most people have property assets that are rising in value, and generally, media just, I've with my partner, she's utterly fed up with all the news. She stopped watching the evening news. She's just sick of it. And I said, okay, I'll bring you some good news. So I started going through the newspapers like the Courier Mail and the Australian that I get online, looking for some good news stories. I cannot find any. I've been going through day after day issues of the Courier Mail, which has turned into an absolutely appalling tabloid rag. It used to be a quality broadsheet back in the day, but I could not find a single happy, cheerful, good news story in any edition of the Courier Mail, and I've given up.
Yeah. Well, speaking of cutting through the media noise, though, you've released a report recently that I think is going to start to do a little bit of that. Do you want to tell us a little bit about the Price Predictor Index?
Yeah, I really love this report that we produced. It's kind of, unique as an overused word, but no one else is doing a report like this, and because there's this obsession with what's happening with median prices. And median prices are interesting. They tell us what's happened in the recent past. But we think that this report is a forward indicator, what tells us what might happen with prices in the near future, because we look at sales volumes and we believe that the patterns with sales activity are a forward indicator of what might happen with prices. So in simple terms, if sales activity is rising in a location, then prices will react to that and rise, and it works in reverse as well. So what we've seen in this new winter edition of the Price Predictor Index, there's one big exception to the general rule. Most parts of Australia, sales activity is still pretty strong, and in fact very strong in most, but Sydney is the exception. In the second half of last year, we saw a pattern where Sydney sales activity was starting to fall away. And in the first quarter of this year, there was a dramatic drop in sales activity in Sydney. And then we're now starting to see that show up in some of the price data, where we're starting to see some evidence of prices falling in some parts of the Sydney market. So that's what we do with this report. We look at every town and suburb in the country, what's happening with sales activity, and we construct this report where we categorise markets as either rising or plateauing or declining or consistency markets. Some markets just very level, no matter what's going on in the wider economy or the broader property market. And it's a good forward indicator of what might happen in prices in all those places.
Yeah, so let's talk about Sydney for a minute, because you said that that's the one exception, that's the one major exception to the data. Is that fair?
That's right. Yeah.
Yeah, I mean, and what's I was going to ask, what's the you said that property sales volumes dropped off a little bit earlier in the year, and now we're starting to see that come through in the price data. Have you had a look into like what the kind of lag is between those two moments, or how accurate can you kind of be and go, okay, if they're going up, then at this distance, talk to me about that.
Well, this is the beauty of this report, and this is where it's valuable for real estate consumers. The time lag is typically 6 to 9 months. So, we can see, for example, a big uplift in sales activity, but it doesn't translate immediately into prices. It takes time for the market to realise that things have changed, and particularly in the other direction. So Sydney sales activity in Sydney started to fall away gradually after the middle of last year. But it was in the first quarter of this year that was a dramatic drop in sales activity. So now we've got a situation where only 26% of Sydney suburbs are actually still got rising momentum. And that's the lowest ratio in the entire country by far. And so it's so the pattern of decline started, say, 9 months ago, and now we're starting to see evidence, if we can believe the core logic figures, of prices falling, although they're not falling everywhere in Sydney, but the overall median price is starting to drop according to their numbers. But that time lag between a change in the market as measured by sales activity and prices reacting is something that investors can use to their advantage.
That's really interesting. And I want to ask a question. I'm going to ask you a few things about this report, because I've actually got the report, had a look at it. It's cool. I like it. But I want to just focus on Sydney for a little minute, because one of the problems that, and we've talked about the media at the start of this, one of the problems is that because the market capitalization of Greater Sydney is so big, right? What happens in Sydney broadly affects how, like the national averages and all of that kind of stuff. So, when we see a big decline in Sydney, then that can, if you then average out the rest of the country, that can have a significant impact, or certainly on the optics of it, which is one of the big points. Do you think, though, that Sydney versus the rest of the country is becoming increasingly decoupled? Because I don't know that, like, if you went back 20 years, you probably wouldn't see the disparity between Sydney, the activity that happens in Sydney versus activity that happens in the rest of the country.
Look, what I've observed over the last 12 or 15 years is that Sydney is usually the exception to the national rule. We've seen that again and again and again. And media thinks that Sydney leads the nation, and in fact, it doesn't. In fact, we've seen some of the idiots who work for Core Logic saying, well, Brisbane's going to fall because Sydney has, and Brisbane usually follows Sydney's lead. Well, Brisbane never follows Sydney's lead at all. I'll say it again and again, property markets are local affairs. Essentially what happens with property markets is dictated by local economic events. So what's happening with Sydney is not happening elsewhere in the country, but it does drag down the national average. So because of the weight of Sydney and the fact that it's falling, in the latest CoreLogic figures, the national average result is a small decline, 0.1%, I think it was. Because of that 0.1% minus figure created by Sydney's situation, the headlines around the country saying property prices falling across Australia, and ignoring the fact that in 12 of the 15 market jurisdictions, property prices are still rising, and in most cases, they're rising very strongly. So, yeah, that's the problem of Sydney. But it's usually the exception. You know, when Sydney was having its boom from 2013 to 2017, that wasn't happening in other places. It didn't happen in Brisbane. Perth and Darwin were going backwards. And then when Sydney went into decline, Melbourne was doing the same thing as Sydney at that time. The headlines were saying, national downturn. Well, it wasn't happening elsewhere. Those two cities were on their own having their own little party initially, and then their post-party hangover. But that was not happening in other parts of Australia. So
it's a really interesting point, because because a lot of people have got a concern at the moment that we're entering into like a period of an economic disruption. There's talk about is it going to be the next GFC and all of that. And look, we can wax lyrical about that. But what's interesting there that you pointed out is that usually the markets aren't all moving in the same direction. But what actually is interesting is I recently did me and the team did a bit of a look into what happened during the GFC. Now, the last time that there was a major economic event, which the GFC was, that caused all of the markets to move generally in the same direction, or caused a decline in national median sales price growth, right, in pretty much all of the 15 regions, was the GFC, which is pretty interesting, right? And you can kind of see that. You can see that on aggregate, all of the markets, all of the 15 regions, the median sales price growth dropped off. But, right, so you might think that means that house prices went down everywhere. But the fact of the matter is 63% of suburbs in Australia went up in value at that same time, which is mad, right? Because then everyone sees that, oh my God, it's all going down. But then 63% of suburbs in Australia went up at the same time. And what's interesting about that, just going to dig into this a little bit further, because I'm going to loop it back. What's interesting about that is that when we looked at which suburbs went up in value versus which suburbs went down in value versus which suburbs stayed the same, the suburbs that went down in value were the higher quartile, so the more expensive suburbs. The suburbs that went, and they on average went down by about 7%. And then the lower quartile suburbs, the lower price suburbs, went up by an average of 9% over the period that we looked at. So what that says to me is that even when you've got these kind of like national trends, like as you say, property markets are a local affair. 63% of suburbs are still going up, and there was a pressure towards affordability, because that's what people do when they're uncertain.
We've got very similar things happening right now, because we're seeing that trend. In Sydney, overall activity down, but in the more affordable areas, it's holding up pretty well. In Melbourne, even more so. The top-end suburbs have dropped, but the more affordable areas are still as strong as ever, and the apartment markets in the inner part of Melbourne have got rising demand. But just picking up on that point about a period of economic disruption, and economists always say, there's economic uncertainty, prices are going to crash. What we've observed is that in periods of economic uncertainty, property markets strengthen. And we've seen that again and again. At the start of this century, we had the dot-com crash and we had 9/11, huge economic uncertainty around the country, share market disruption. But out of that came a 3-year property boom in Australia. Then we've got the GFC in 2008. In 2009, property prices rose in Australia. In 2010, they rose more. And now with COVID, all the economists forecast prices would crash, but we actually got a property boom. So
and I'm going to add another one in there for you, Terry. If you go all the way back to 87, right, which was Black Monday or whatever it was, when the stock market crashed, what happened in 88, 89?
A most extraordinary property boom. So what is very, very clear as a reaction in this country is that when we have times of great economic uncertainty, people retreat. I know it's a cliche, but it's true, to the safety and solidity of bricks and mortar, and we see property strong. So the economists, I don't know, they're not students of history. They certainly don't do any research on what's happened in the recent past before coming to their conclusions. And that's why they keep getting their forecasted property prices wrong. And right now they're forecasting a big drop in property prices for the simple reason that interest rates are rising from a very low base. And I think they're going to be wrong again, but they'll manage to shrug that off and carry on regardless, as they always do.
Yeah, 100%. It's really fascinating, isn't it? And I think that there's a really interesting, really logical reason why that is the case, why property performs better in times of uncertainty. Yeah, safe as houses, bricks and mortar, all of that. It's because the asset can't go to zero, right? Because the thing about it, like a company can go to zero. A company can go bust and be worth $0 at the end of the day, right? It can just fall apart, right? But property can't go to zero. And so when you're thinking about what is the best risk-adjusted return that you can get, it's real estate, right? Because it's a real asset. Yeah. And it produces, right? Because at the end of the day, intelligent property investors are value investors, just like Warren Buffett. They're looking for real assets that produce. So it doesn't freaking matter what economists say, because they've got a real asset that produces regardless of what the rest of the market says.
Yeah, and property doesn't do what share markets do, where share markets can absolutely collapse in a day. And lose 5 or 10% of its value in 24 hours. Real estate never does that. There are periods when real estate can drop, but it doesn't lose 5% in 24 hours. It's so solid and it's slow moving, and that people like that. They can depend on it and feel safe with it. And so when times are uncertain, that's where people turn, and I think we're seeing it again.
Yeah, awesome. So what other big trends or key takeaways did you get out of putting together the winter edition of the Property Price Predictor Index?
Well, firstly, we've talked about what happened in Sydney, but that's very much the exception. Elsewhere in Australia, sales activity levels have held up very well. In some cases are the best ever. We're still seeing very, very strong price performance in most parts of the country. The standouts for us are the smaller capital cities and the associated regional markets. So it's Perth and regional Western Australia, Adelaide and regional South Australia, Brisbane and regional Queensland. And as a bit of an add-on, Darwin, which never gets talked about, is actually doing really, really well, really strong, but no one ever pays any attention to Darwin. But it's actually a rising market, very strong. The highest rental yields by far in capital city Australia, very low vacancies. It's worth considering, but no one ever does.
Yeah, but the problem is, right, because that may very well be true, and I don't want to rag on Darwin, right, or the Northern Territory. Great places, great people, wonderful, good stuff. But historically, it's been a little bit more volatile, right? And
yeah, it is. And that's the problem with Darwin. And I'm not recommending people rush out and buy Darwin. I'm just noting that it's actually in a period of strength. But it is volatile, and people need to be aware of that. The real takeaways for me are Perth, Brisbane, Adelaide, and their related regional markets are the places that are showing the greatest strength at the moment. That's showing up in a number of ways. I always construct a thing I call my national top 100 supercharged suburbs, and this is based on the patterns of sales activity. These are all suburbs where sales activity over the last, say, 18 months has just been going up, 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 up. In some cases, extraordinary growth in sales activity. And more than 20 of the locations on that National 100 are Perth suburbs. I didn't realise until I went through and counted that Perth had been so strongly represented, more so than any other part of the country. And it's a market that's not getting the attention it deserves. I think it's actually a market that's really on the rise for the first time in a decade. Great value for money. It's now the most affordable capital city in Australia. The local economy is strong. The local state budget is stronger than anywhere else in the country. They're spending big on infrastructure. That they are aware that their economy is vulnerable to the resources sector, so they're working to broaden it and having some success with that. And I just think it's really worth consideration at the moment.
Yeah, 100%. And I think that it's a really interesting point that you've got there, because markets do move and change all the time. And I think that generally speaking, a lot of people, their thinking is behind where it needs to be in order to get ahead, because you could argue that a lot of the, like Brisbane, yeah, great, it's been going well, but probably the better time to buy in Brisbane would have been like 2 years ago or whatever, before it started to kick off. And you're kind of seeing that same thing in WA now, with transparently, we've been buying there for, geez, I don't know, well over 12 months, maybe 18 months now or something like that. But we're still, I think, we're right at the start of that curve. Like, I think it's right at that transition where it's about to pop. And you watch in the next sort of 6 to 12 months, that's going to be the city that they're all talking about. And but then that, interestingly, that's the moment that you need to then switch and go, okay, where are we going next? How do we stay ahead? How do we shift?
That's right. And the problem is, for most investors, that they're herd animals. And I think Adelaide's probably the best example of all, because I've been banging on about Adelaide for years and no one's been listening. Well, that's the way it's felt, because I can see that Adelaide, which has a reputation of being a low-growth city, was changing for the better in important ways, and that it was going to be a great place to own real estate. Now, everybody wants a piece of Adelaide. It's become the most frenetic, most competitive market in the country, to the degree that people just give up because it's too hard to buy there. It's selling so fast. Yeah. But the smart people were there a couple of years ago. But most people aren't that smart. They herd animals, so now they're polling it. Yeah. And the point you made a moment ago is that people need to be ahead of these things, and so they need to be listening to really smart people like you and me, telling them about the places that are going to show that sort of growth and get in before the masses do, because you're trying to get into Adelaide now, it's almost impossible. But if you were smart, you would have been there 2 years ago. Now, Perth is quite early, I think, in a curve, and people should be getting there now, not wait until they read that Perth's grown 25% in the last 12 months.
I reckon it's on the precipice, like on the ground feedback. I reckon it's on the precipice of almost being at that, like it might have almost crossed the chasm, So you've got that, have you ever read Geoffrey Moore's great book called Crossing the Chasm? Right.
So, I have not, but now that you've recommended, I will, because all your recommendations of books to read have all come up trumps for me.
Well, I'm not going to recommend you read this one. I'll give you the synopsis, Terry. It's not like, it's okay, but the quick synopsis is that there's basically an adoption curve for any technology. It's written about technology, right? But you've got the technologists, right, who are like way ahead of the curve, and they'll test anything out even if it breaks. Then you've got the early adopters, right?
Yeah.
And then you have a big gap between the early adopters and the early majority, right? There's a big gap, right? And it's when that chasm gets crossed between those 2 points, that's when it starts to become mass. And then you got the late majority, and then you've got the decline after that. And it's a very interesting way to think about how that applies to psychology around property markets too, because we've been in the situation loads of times, and I'm absolutely certain that you have been as well, where you're saying, hey, everyone, look at this, let's go there. And everyone's going, nah, you're mad. That's that's rubbish. Don't go there. And then all of a sudden it crosses the chasm in the psyche of the populace. And then it's frenetic. So,
yeah. And the secret to success really is detaching from the herd, and either running in the opposite direction or maybe leading the herd. But most people,
I think leading the herd, being a pioneer, I think is the way to go.
Yeah, I think so. So, we're seeing good and useful patterns for people to be aware of in the outcome of this new edition of the Price Predictor Index. Affordability, people chasing affordability is a big pattern, where even the cities like Sydney, they're down, the affordable areas are still holding up quite well. And that's not just the sort of the outer ring suburbs for houses, but also some of the apartment markets. And that's another trend that's emerging.
Yeah, so let's talk about that, right? Because obviously we kind of touched on the fact that there's, broadly speaking, I think you could probably say a compression towards affordability at the moment, generally, which is reflected in some of the more affordable capital cities and also regional markets. But then in the major capitals, where the markets are generally more expensive, that's kind of showing up in apartment activity. Is that right?
That's right. There's really, I suppose, four manifestations of the affordability theme. One is the smaller, more affordable cities are the leading ones. Within the bigger cities, it's the affordable markets that are doing well, and including in some of those smaller capital cities, the market's being led by the affordable end. Then we've got the trend, the exodus to affordable lifestyle. So regional market's still very strong. But this fourth one, which is kind of new, I think, and that is we're seeing an uplift in buying in suburbs where apartments are a big part of the mix. particularly in those areas where median price for apartments is less than half the median price for houses. We're seeing that in both Sydney and Melbourne. In some suburbs, in their inner city rings, apartment prices are about a third of house prices in those suburbs. And those are the places that are really being targeted, I think.
Yeah, it's interesting, right? Because I was talking to someone recently who wanted to buy an apartment in Western Sydney. And they actually got told by the bank that they would have to have a 30% deposit because the risk profile from the bank had changed, which I thought was really interesting, a really interesting perspective.
Well, yeah, I mean, let's face it, the banks haven't got a clue about housing markets. I mean, look at their forecast. I mean, it's their business to know housing markets better than anyone else, but in actual fact, they don't.
No.
And some of the criteria they have applied to lenders, some of the risk ratings to certain locations are just ridiculous. They're like 5 years out of date a lot of the time. And so that they're going to have to catch up with the fact that in cities like Sydney and Melbourne, apartments are a big part of the scene. There's certainly areas that are areas of risk, like prone to oversupply.
Yeah.
But most parts of those cities with their apartment markets aren't like that. Suburban apartment markets don't have that same area of risk. And we've seen around the country, actually, in this latest analysis I've done, what's really stood out for me is the extraordinary level of growth in apartment median prices we've seen in some places, not everywhere. But on the Gold Coast, the Sunshine Coast, some of the city markets, we've seen a really big uplift in median prices for apartments. And I think, more and more people are actually choosing that lifestyle. We're seeing older people downsizing to apartments, and that's a big growing cohort in the market. Young people who want to buy in good areas and can't afford houses, they don't want to go out to the fringes, so buy an apartment. It suits our lifestyle anyway, low maintenance lifestyle. So, I think we're going to see a re-rating.
Do you think that's going to become a bigger and broader trend? Because, a couple of reference points I'll throw in here that are probably worthy of discussion. So in the US, there's a massive, it's a huge trend towards renting. Home ownership is on the decline, and most people are just renting. And so as a nation, that seems to be the general thread of where people are going. Then talking to some, real estate agencies, principals and stuff in regional hubs, right? So, they're talking about the critical lack of supply and the critical rental vacancy rates and all of that kind of stuff, and just how hard it is for people to get a place. These towns, their economies are booming, but people literally have nowhere to live, to the point that people are starting to split up rooms and do all kinds of stuff to try and make things work. And so there's potentially a trend there where we might actually see more apartment growth as developers and stuff move into these areas as well and start to build more, because people are looking for places to live that are more affordable generally. So do you think we'll start to see more apartments even sprouting outside of the capitals?
Yeah, I think so. It's going to be, there's going to be less need for it outside of the big cities because, houses are still affordable in many places for most people. Although, just the supply of rental properties is just another issue, which isn't being addressed by anybody. It's extraordinary. We've just had a federal election campaign in which they talked about housing affordability, but there wasn't a single word about the rental shortage, which is a much bigger problem and needs urgent attention, and the politicians seem oblivious. We've had the Brisbane City Council pretending to do something about it by hitting people who Airbnb their rental properties in Brisbane with massive rates increases. Well, people using Airbnb aren't the major part of the problem. It's the lack of investor activity generally that's been happening over 5 or 6 years that's led us to this shortage. But just going back to that first point, I do think we're going to see more people for various reasons, affordability being one of them, but also lifestyle is another major motivation, opting for apartments in various ways. And but it's mainly going to be, I think, a big city thing because, affordability is the major driver of the trend. And now what we've seen in this latest boom is there's been a widening of the gap between apartment prices and house prices. I wrote something for Money Magazine about this recently. The gap was already big in Sydney, but the gap has got bigger in this latest boom because the rate of growth for houses has been more than the rate of growth for apartments in this latest phase. And so there's a yawning gap now. It's like $500,000 in the difference between the median prices. And so that's a gap that people can jump into and say, okay, all right, I can't afford to buy a house in Hawthorn or I don't know, one of the inner west suburbs of Sydney. But look at the price of apartments. It's like a third. And one of the things I did with the Price Predictor Index, because I was interested in this, was just take note of what's the normal ratio between in a suburb between house prices and apartment prices. And there's huge variations. But the standard norm is, say, about apartment prices median will be about 60 to 70% of the house median. So where you've got suburbs where apartment prices are a third of house prices based on the medians, then you've got something that seems to me to be an opportunity. A really good suburb like Hawthorn or Richmond in inner Melbourne, trendy places that people want to be, and typical apartments are about a third of the price. Why wouldn't you as a young buyer? It seems to me like an opportunity.
Yeah, totally. I mean, obviously there's still the same considerations that you've got to have with apartments. So you've got potentially additional costs with strata and all of these other kind of factors.
Yeah.
And also potentially supply risk issues. People have been asking me probably over the last 6 months, do you think apartments will ever have their day? And I'm like, yeah, it's now. Like it's now. They're like, there's really good opportunities in some markets for apartments, but you've got to still be cognizant of the risk. So you're right. Like in a highly suburban and already dense kind of location with very little development opportunity, the risk profile is certainly a lot lower.
Yeah.
But then obviously if you've got kind of broad acre developments, like there's pockets around Footscray in Melbourne, and obviously Docklands in Melbourne got oversupplied. Brisbane in a lot of parts got oversupplied as well because they just went hell for leather and started building huge high rises. But if you've got those smaller pockets, those already established residential communities with smaller developments, I think there could be an opportunity there.
Yeah. So, and I would urge people, if they're thinking about going down the apartment route for investment or for a home, look at sort of boutique style apartments. Don't go for the generic high rises. Avoid the Docklands and the South Banks, I would suggest. But, in Brisbane, there have been too many apartments built in South Brisbane and Fortitude Valley. But then right next to Fortitude, you've got New Farm, which is the most expensive suburb in Brisbane for houses. And you've got, I've got friends, we're visiting this very weekend, who have got an apartment in a little boutique block in New Farm. And it's shown fantastic growth because it's a little, it's got a point of difference. And it's in a suburb where there isn't high-rise apartments, and that's something that can't happen there because of the zonings. So that's the sort of thing to look for, I think, if you're thinking of going down the apartment route. Avoid the generic, buying in a building where there's 200 just like it, and go for the boutique apartment sort of project, and you might get something that's got some character and a point of difference and potential for growth.
Nice. Now, I'm going to ask you a specific question, and you can deflect this at will if you want, but you've got your supercharged suburbs in your national top 100 in your Price Predictor Index. Do any particular, I know we've generalized, Perth's pretty good, but hey, it might be starting to get a little bit active there. Any particular suburbs that stood out, or any unique ones that I know you spoke about Darwin being a bit like, okay, that's happening, but were there any unique suburbs or anything that stood out to you that people should be paying attention to, or just an interesting one?
Well, let me just, because I'd love to have a memory as good as you think it is, but I don't. So I've now sort of caught it up so I can look at it. I did mention that it struck me when I went through the list that how many Perth suburbs were there. But, I put places in these lists without fear or favour, and I try to put aside my biases. And sometimes I'm putting places there that, are not places that I would necessarily recommend to people go and buy, but nevertheless, the numbers say they deserve to be included.
So they're not recommendations. They're not.
No, they're not. They're just, these are the ones that stand out for the numbers. Now, Brisbane City, for example, I've always been, urged caution inner city Brisbane, they've been through that period of oversupply. There's been no value growth. People who bought there 10 years ago, the apartment's still worth the same. It's like Surfers Paradise on the Gold Coast. Sometimes, its numbers are compelling for a list like that. Well, it's not on this current list, but there's been no value growth because of oversupply. But Brisbane City is on this list because when I look at the pattern of sales volumes, 18 months ago, a typical quarter was about 110 sales, and now it's risen every quarter since then. So now it's like more typically 240, 250 sales per quarter. So
that's for units though, right? That's for their units.
Well, there's no houses in the Brisbane CBD, but there are plenty of apartments. So this is a market that I would not normally recommend to people, but the sales volumes figures are quite compelling, and it is indicative of the trend that we've just been talking about, in fact. So, it's interesting that that's on the list. Cairns City, which is like the CBD of Cairns. Again, this is an apartment market. It's on the list because the number of sales there has just been rising quarter by quarter for the last 2 years, from not very many to, really spectacular numbers. So those are some interesting inclusions. A lot of the places on this list are affordable suburbs in sort of some of the smaller capital cities. But then you've got places like, and I know we've talked about this little location before, Inverell and also Glen Innes. They're not far from one another in regional New South Wales. I would normally say to people, no, they're too small and the economy's too narrow. But nevertheless, people are buying there in big numbers. And, look at Inverell. 2 years ago, the typical quarter was about 40 sales per quarter. Now it's over 100 per quarter. And in Glen Innes, which is a town that I've been through a few times and I like a lot, I like the character of it. It was just doing 20 sales per quarter. Now it's doing 60 or 70 per quarter, and it's been rising steadily. And we've seen prices reacting to that. So these are places that you wouldn't necessarily recommend as this is the best place you can buy in Australia, but something is happening in these markets. They're indicative of trends. And the trend in this case is, that exodus to affordable life. People are moving to these places because affordable, rural lifestyle and, safety and community. I live in a country town where there are no traffic lights. You can get a park in the main street. It was a great place to raise the kids. You always felt safe, wonderful sense of community. And these places, there are some of these places on this supercharged suburb list are indicative of that trend still very much.
Well, it's about portability, right? It's about mobility, and we've talked about this a lot before because, with the advancements of technology and connectivity and, work from anywhere and all of that kind of stuff, but then also even internal transport, I don't normally, for obvious reasons, I don't normally talk about specific suburbs either, but I would say Gunnedah is a great example of a smaller regional town with huge prospects. And I note that that's also just cheeky little one in your supercharge there as well. But I think it's a cracker, right? Sales volumes are on the way up. Economic opportunity is massive. They've had record cotton harvests. The price per bale of cotton has doubled. So that's millions of dollars pumping in the economy. They've got daily flights between Sydney and Gunnedah. So if you live there and you need to, it's all of these different factors that people don't consider about these regional economies.
And Gunnedah is on the current list of 100 supercharged suburbs, and the sales activity has risen a lot. It's a good place. I really like Gunnedah. I've been through there many times, and I just like the fabric of this place. And it's got, it's obviously an agricultural town, but it's got some big resources action, and it's also got tourism. And it's not actually on the route of the Inland Rail link, but it's nearby, so it will get uplift from it.
Well, it gets uplift from the Inland Rail route, but then also from other more major economies like Tamworth and stuff like that as well. There's a lot of overflow there. So,
and it's also, there's a big movement to building alternative energy, and it's been increasingly encouraged. And the change of federal government will help that. And areas like Gunnedah is getting some of that action. Other inclusions on this list that you might be interested in, we've talked about these places before, the Iron Triangle towns of South Australia. Whyala's on this list, massive uplift in sales activity. it's actually, its sales numbers are now more than, remember that previously 10 years ago had a big boom related to the resources boom. The sales numbers now are even bigger than they were then. Port Augusta is also on the list of 100 supercharged suburbs. Massive increase in sales activity in Port Augusta, and you and I sort of understand why that's happening.
Yeah.
Port Perry's not on this list, but I do know that it's also increased. It's a rising market for sure. So yeah, it's some of the inclusions are surprising, but we put them there because the numbers say they deserve to be there, and it's interesting because they do show different things that are happening in the country at the moment that might otherwise pass people by.
Yeah, but I think what's important for people to remember as well is that data is good, but you also need insights. Information is one thing, but insights is really what's important, because in some of these locations, maybe the sales volume is going up and maybe prices are going to rise. But what you actually need to do to decide if it's going to be the right investment opportunity for you is to actually understand what are the underlying reasons that activity is happening and what is the future look. You got to look forward and say, okay, what is the likelihood that this is going to continue or stabilize, or how could I understand if this is going to be a good long-term opportunity or a good short-term opportunity, and how would I make that good the right investment decision around that? So I think that's kind of the critical piece to understand as well.
Yeah. Okay. Yeah, I think it's a great time, more so than ever, to be getting some really good advice from people. We often talk about it, the importance of having a team on your side. Build your team before you build your portfolio is a good mantra to have. So, get access to good research information, but also good advice from people who have experience property, because a lot of people are stumbling around out there without too many clues about how to proceed.
Yeah, 100%. I couldn't agree more. So, Terry, if people want to get the Price Predictor Index, where do they go?
They go to the hotspotting.com.au website, and it's there amongst our stable of reports for sale, and they can just sort of follow the prompts and get themselves a copy of that report. I think it's a really good one because it's unlike so much of the information out there. It's a forward indicator of what might happen with prices, whereas most of the data we get through media is telling us what has already happened with prices. And as we know, the past, it doesn't necessarily inform the future, but this is one instance where it does.
Yeah, well, it's actually one of the fundamental. We talked about banks earlier, just to segue on that, hang on that point a little bit. We talked about banks earlier getting their data wrong and all of that kind of stuff. The fundamental problem with property valuations, banks, like all of these institutions, all of the automated valuation models, all of that kind of stuff, all look backwards. They all look at like what has happened even in the last, say, 90 days or whatever, and all of that kind of stuff, which is great if markets are flat. But as soon as they're going up, it's wrong. They'll underestimate the prices. And as soon as they're going down, they're wrong. They'll overestimate the prices. And so trying to work out how you can stand on the precipice and look over the edge and see into the distance, I think is the key for any investor to actually know what's actually going on and how to make those decisions. So I think this is a great report for that.
Yeah. Yes. Well, I have a vested interest, of course, but I do agree with you.
Awesome, Terry. Anything else you want to add before we wrap it up for today?
I'd just like to repeat something I said right at the beginning. When the data comes out, CoreLogic or Domain, whatever, don't read what the media says in the report. Get the report. It's really easy. It's free, and it doesn't take long to just look at the tables of figures and see what the numbers actually say is happening. You'll be much better informed if you do that.
100%. I couldn't agree with that more. Awesome, Terry. As ever, I've enjoyed the discussion. We always have a good time when we do these podcasts together. They're always informative and valuable, and I always have a good time hanging out with you. So thanks for that, and I look forward to having you on again.
Yeah, no, it's always fun talking to you, and in particular, Goose, about these issues, because more so than most people around the country, you actually do understand how property market. I reckon you could count on the fingers of one hand the number of people who truly have a really in-depth understanding of what the dynamics of property markets. None of them are working for the big banks. None of them are writing articles for media. None of them are economists. But you're certainly one of those, and it's always a lot of fun talking to you about property markets.
Well, I really appreciate that glowing comment there. Thanks, Terry. Mate, we'll see you again soon. We'll have you back on the show. See you soon.
Okay, great.